Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Welcome back to another edition of the Forex Morning Mastery, where we usually dissect the current market structure. Of course, do a follow-up detail to the videos we had during the course of the weekend, and of course dissect the current market structure from a technical standpoint to strategically position ourselves ahead of today's trading sessions. Well, my own name is Sheriff Daramola, and for the next 30 to 40 minutes, I will be your host as I take you on a trading journey to dissect the current market structure using simple parameters and fundamental tools such as trend lines, key levels, and chart patterns to gain valuable insights into the current market structures, and of course use the information we gather to unravel the potential trajectory of price action for today's trading session. Well, it's since the beginning of the week we have been monitoring three assets, which includes the USOILSPOT, the GBPUSD, and of course the XAUUSD, all of which have been doing pretty well since the beginning of the week. Like the GBPUSD, we were able to scoop in a significant amount of profit between Monday and Tuesday. The same thing happened to the US oil and of course the XAUUSD. However, there are some interesting development going on in the market lately, as you would have noticed that in the last 24 hours, we're beginning to notice the reemergence of buy pressure in favor of the US dollar. And there could be a lot of factors that may be driving this sentiment, one of which is the potential of a retracement of the impulsive move we saw on Tuesday, which saw the dollar nosedive to the downside. So we might likely be seeing a retracement going into today's trading session, or it might even be the reemergence of the dollar again based on the economic features we witnessed here yesterday. So we are going to be taking a deep dissection into this current market conditions to position ourselves for today's trading session. So I implore you to stay tuned in so you don't miss out on any of the valuable ideas we will be deliberating on today. Now, for those of you who are joining us for the first time, you're highly welcome on board. I'm very excited to have you around with us this morning. Well, you may be asking, what is this all about and what is it that we do here? As technical traders, we gather here every day to come together as a community and engage in follow-ups and reviews of the assets we've been monitoring since the beginning of the week. And it usually kickstarts 9:05 a.m. West African time, 8:05 a.m. UTC. And in fact, I recommend that you stay tuned in so that you don't miss out on any of the valuable informations we will be sharing here today. It's important to note that my aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. And I would advise and encourage you that the more time you spend with us, the better you will become at comprehending our analytical approach and utilizing the information gathered here to enhance your own trading decisions and strategies. So once again, I welcome you on board. Now, to make things clear here, the Forex Morning Mastery is a follow-up detail. We do follow-ups on the assets we shared during the course of the weekend. So usually during the weekend, I usually do a public broadcast of what my plans are for the upcoming week, and during the Forex Morning Mastery we come here to follow up on them. So we only going to be focusing on the 1 hour time frame here. So for those of you who have not watched these videos, I encourage you to go watch those videos so you can have a background knowledge of how we got to this point, how we were able to identify the key levels that are guiding our trading decisions for the week. The links are right in the description box of this current video you are watching, so you can go check them out after the live session to get a better perspective into what is going on in this market from an holistic perspective. So, with that being said here, I will be diving right into the business for today. And as usual, you know how we do it. The first thing we normally do is to check on the economic calendar, as you all know how important this is, as these fundamental factors usually manifest on the chart in technical patterns and price movement. By monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and of course timing to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after these economic events. And for this week, we have been focusing on the United States and the United Kingdom economic dockets, since these are the economies that affects the assets we've been monitoring so far this week. However, for today, Thursday, November 14th, we do not have any high impactful events. So in that regard, I would like us to include the medium impact event. So let's see if we can see any fundamental factor that has a tendency of influencing the market sentiments today. Now, bringing in the medium impact event here, you will see that we have a high number of speeches coming up today. And of course, one important thing about the speeches is that it gives us an insight into the health situations of the economies, and not only that alone, it also gives us insight into the central bank's outlook on the economy, the potential policy shifts, and of course potential interest rate decisions going into the next one for December. So these are very, very important events that has a tendency of impacting trading decisions and of course market sentiment. Now, if we look at what we have here, in about 3 hours from now, we look forward to Lisa D. Cook. She's a member of the Board of Governors of the Federal Reserve System, so she will be giving a speech in about 3 hours from now. Then in about 5 to 6 hours from now, we're having another speech from Loretta Mester, who is the President and CEO of the Federal Reserve Bank of Cleveland branch. Then later today, we are going to be looking forward to the initial jobless claim, which is another figure from the labor sector. Though it's not really that important, but majority will want to have an insight into what it will look like. Then we also have the industrial production, which is another impactful event, as we all know how the this industrial sector is significant to determine the health situation of the U.S. economy. So in this case scenario, if the data comes in higher than expected, it will be considered as positive. Now, if we look at what we have here from the data for the month of September, we had a 0.3% expansion in that sector, and economists are projecting a deficit of 0.3% for the month of October. So this tells us that things are not looking very rosy in that sector. So we look forward to see what the actual data will be. Will it be just as expected, below expectation, or even beyond expectations? Then we also have some more couple of speeches here. We have Williams, we have Wellers, and then from the United Kingdom, we have Ramsden's speech. Ramsden's, for those who don't know, joined the bank to become the Deputy Governor for Markets and Banking, and is also a member of the Monetary Policy Committee of the Financial Policy Committee and the Prudential Regulation Committee as well. So he holds a very significant post, which also gives the privilege of understanding the nitty-gritties of the United Kingdom economy, and whatever he says today also will definitely be having some impact into the market. So majority today's activities, more of speeches today, so we want to be seeing what these officers and officials will be saying to give us an insight into how we are going to be positioning ourselves. However, as technical traders, we do know that the anticipation of this event alone usually has a tendency of influencing the market sentiment, which of course would reflect on the chart as price action. So as technical traders, let's dive right into the business and let's look at the current market structure from a technical standpoint. So as usual, we will be moving right into structures. I see your comment here. Kelechi, good morning to you. Glad to have you around this morning. Nahim Likwat, good morning to you too. And glad to have you around this morning. So you ask, okay, no problem. The gold is part of the asset we've been monitoring since the beginning of the week. So you don't have any cause to worry, as we will be attending to that in no time. So just stay tuned in so you don't miss out on that session. So the first asset we are going to be taking on today is going to be the USOILSPOT, and in fact we have an interesting situation going on in this market. So far this week we've been doing very well, and we've had situations where we bought the USOILSPOT. We also had situations where we sold as well, and in both instances we've been able to scoop in some significant amount of profit. Now, for those of you who are with me on both my TradingView and Telegram platform, you must definitely have gotten an update as to how we are going to be managing this asset for today. Currently, we have about 3 sales positions activated, accumulating over 350 pips in profit as oil prices continues to decline to the downside. And this decline in price could be attributed to the larger than anticipated weekly increase in the US crude stockpile, which actually came in yesterday at 3.6 million barrels for last week, as against the previous one that was at 0.77 million. And of course, we know how the supply affects the market. When there is high supply, price usually drops to the downside. And I think these are the ways that the US is trying to negate the effect of the oil cuts in production from both the Saudis and the Russians. So this is going on behind the scenes, and also the Chinese government the Chinese economy isn't really doing very well lately. And of course, we recorded some decline in demand for oil in the Chinese economy. And of course, we know how important the Chinese economy is to the oil market, as the Chinese is the largest importer of oil commodity in the world. And if they are having a less demand for oil, then definitely prices are likely going to be dropping to the downside. So if we look at the economic factors behind prices on the US oil commodity, it's more or less of the potential that price may likely push to the downside. However, the cut in oil production that was pledged by the Russians and the Saudis cannot be negated to as well. 1.2 million barrels per day till the end of this year is a very high figure. So we are going to be looking at the current market structure from a technical standpoint to see how we intend to position ourselves for today's trading session. Now, for the sake of those who are not part of our earlier sessions, let's run through how the week started so we can have a background knowledge of where we are coming from. So at the beginning of this week, it was a very simple setup we had here. We had price action confined within the range of the $76.75 area, and of course the $76.35 level, to give us an insight into the level of uncertainty that was going on at the beginning of this week. Now, coupled with the fact that price action was sitting on a robust ascending trend line, which we spotted since last week Wednesday, we were looking out for buying opportunities. And in that regard, we positioned ourselves just exactly above the resistance line to capture our first buy position for the week. And since then, we have been buying this asset. As you will see, we had multiple entries where we added more positions, had a breakout of the $77.50 level, and of course we also added one more, had the $78.43, and of course the $78.63 area, as we were able to scoop in approximately 300 pips on that buy bullish trend we witnessed at the first couple of days of this week. However, during our live session yesterday, we begin to see some new development happen in the market based on the nature of trading activities during the Asian session yesterday. And what we noticed was how price was confined within the range of the $78.63 level and the $78 area throughout the Asian session, to emphasize that buyers are finding it difficult to push price to the upside. And from a technical standpoint, remember that we noticed the potential transition of price action into a reversal pattern despite the bullish momentum we saw here, and we said that if this happened, it could be the beginning of a retracement move. Now we saw the structure here. We saw the left shoulder of the head and shoulder pattern. We saw the head, and of course we saw price transition to the right shoulder, where we had the neckline of that reversal pattern at exactly the $78 area. And I think during the live session, we were saying that if price action breaks down and retest the structure, we want to be joining a bearish opportunity. And this was exactly what happened. As you will see here, price did break down the structure, retest, and since then price has been nose diving to the downside. And in fact, we had multiple entries as well, as we added more positions at the breakdown of the $77.50 area. We also had at the $76.75, giving us 3 positions, running with over how many pips right now? I think we have over 350 pips in profit at this point in time. And for those of us who took advantage of this opportunity, well done, and kudos to you for being on standby to capitalize on this move. Now, the next thing we want to be doing here, of course, you know how we do it. Whenever price action moves significantly well in our favor, we definitely want to be moving our stop losses and secure or protect the current sell position. And from the way things are looking right here, I will be suggesting that anywhere between the $76.45 area and the $76.80 seems most appropriate to lock in some profit here, and let's see how the market is going to be reacting to this current structure for new trading setup. Now, with that being said here, and with a well secured position at this juncture, what is going to be our next line of action for today? Are we going to continue selling, or are there chances that buyers will come in? Probably we might be seeing the end of the retracement move to inside an uptrend scenario. But I would like us to take a quick peek into the 4 hours time frame to see what things are actually looking like around that area, to gain some insight into what is going on here. Now, if we look at the 4 hours time frame, for those of us who are part of our live session on Monday, you will definitely be familiar with this current structure. And in fact, we saw on the 4 hours time frame that price action has been on a strong bearish momentum, leading to the breakdown of our key level situated at the $80 area. And of course, price action retraced back into that area but didn't get anywhere close before we saw that reversal setup that pushed price to the downside. Now, the question going into today's trading session is, will this bearish momentum continue to the downside, turning into a sell-off, a massive sell-off, or are we likely going to be seeing the end of that retracement phase, where the appearance of reversal patterns will give us an opportunity to join an uptrend move? Now, let's look at the structure closely. Now, we saw a bottom last week trading session. We saw a bottom at the $75 area, which gave us something like a reversal pattern, which actually gave us the privilege of joining that uptrend move. We saw this reversal pattern where the $76 area was serving as the neckline of that reversal pattern, and it's because of this breakout of neckline that made us to buy the USOILSPOT as we rode this momentum all the way into this area before the bearish momentum began. And of course, from a technical standpoint, whenever price action does break out of the neckline of a reversal pattern, we expect at some point price may still come back to retest the structure where the appearance of buy pressure could still incite an uptrend move. However, if price drops below, then this might likely be a sign that sellers are continuing to push price to the downside. Then another thing about the structure here is the fact that price action had already broken down this ascending trend line we spotted at the beginning of the week. And let's see if the market will probably retrace back into the trend line to incite a downtrend move. Now, looking at the structure here on the 4 hours time frame, you will see that price action is back into the neckline of that reversal pattern we spotted at the beginning of the week. Now, the question is, how will the market react to this trend, to this neckline around the $76 area? So what we want to be doing now is to go back down into the 1 hour time frame. Let's see if we can identify a setup or a market structure that we can use to guide our decisions for today. So if we can see reversal patterns like double bottom structures, then we want to be getting ready to buy. But if price breaks down the structure to the downside, then we will be looking out for selling opportunities. So with the information we have gathered here, let's scale down into the 1 hour time frame to see what is really going on around this area. Now, on the 1 hour time frame, what I did here, the first thing I did here was to acknowledge the bearish momentum that started on Tuesday after we saw that impulsive bullish leg. And in fact, if you connect the series of lower highs here, you will see that we have a beautiful descending trend line to guide our trading decisions for today's trading session. And of course, you do know how we use our descending trend lines in this community. As long as price action remains below the descending trend line, we want to be looking out for patterns and structures that support the idea of buying that, of selling that asset. Now, if you look at the structure, zooming into what has been going on here throughout the Asian session, you will see that we have a support line around the $76 area, which is exactly that spot we identified on the 4 hours time frame. And of course, we noticed how sellers were finding it difficult to break through that area. And in fact, this led into a situation where price was confined within the $76.50 level and the $76 area to emphasize the level of indecision at this point in time. Now, let me do this for the sake of clarity. Let me mark out this range. So we have the $76.50 level. So you do want to be marking that out also on your chart, as we will be needing it as a reference point to guide our decisions for today. So it's obvious that price action is trapped within a range right now. And of course, you know how we attend to ranges when we see them. It gives us an insight into the uncertainty in the market. So we want to exercise patience and wait for either the breakout or the breakdown of the range to give us an opportunity to trade. And of course, with sell stop and buy stop order plays at both ends, we have our sell stop order already triggered at the breakdown of the $76 area. So let's see how this is going to play out today. Now, remember that for those of you who are joining us for the first time, you do not have any profit in your kitty at this point to leverage on to test waters below the $76 area. For those of us who have been profitable since the beginning of the week, we can afford to place a sell stop order below the $76 area, because we do know that even if it doesn't move in our favor and it goes against us, we are only risking some of the profit we had made so far this week. But for those of you who are joining for the first time and you don't have a leverage yet, I would suggest that you exercise patience, wait for the retest of structure to happen, giving us the beautiful confirmation. Then you want to be joining that bearish momentum to the downside. So we'll continue to look out for selling opportunities here as long as price remains below the descending trend line and the $76 area. However, in as much as we're looking out for bearish opportunities today, we cannot ignore the potentials that buyers could come in. Remember, we are at a very crucial juncture when we looked at the 4 hours time frame. So we want to see how the market will react to the structure. And in fact, during the Asian session, we saw buy pressure around the $76 area. And in fact, the breakdown we saw now could turn out to be a false breakdown. So if buyers come in and take us out of all the sell positions, how do we intend to capitalize on the next move? Of course, you know how we attend to our ranges when we have them. We want to see price break out of the range, $76.50 level, to give us an opportunity to buy. And of course, if price does break out of that $76.50 level, price would also have broken out of that descending trend line, which will be a beautiful signal that the trend line may no longer have the capacity to continue to negate the bullish attempt, making it more promising to look out for buying opportunities. So if we are going to consider buying here, I want to see price break out both the descending trend line and the $76.50 level, and we could see some retracement back into structure. It could retest the descending trend line or the $76 area to inside that uptrend move, but ensure that your stop losses capture all this range. That is, whatever thing you're doing, your stop losses captures all this range, so it will be between 50 to 60 pips thereabout on that one, giving enough breathing space for price action to move around if there will be some choppy situations around that area. So basically, for today's trading session, our center of focus is between the $76.50 level and the $76 area. We are depending on the direction of the breakout will incite the idea we are looking for. So these are my views on the USOILSPOT for today. If you have any questions whatsoever, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions, while you can also use that time to mark out these levels on your chart, as you will be needing them as a guiding light to make your own independent trading decisions today. All right, good morning, everyone. I see your comments here. Eric Mudavadi, Naim Likwat, Jonah Aruna. Good morning to you guys. I'm very glad to have you around with us this morning. So in the absence of no questions, I want to assume that we are all on the same page, and in that regard, we shall be moving on to the next asset on our watch list. So the next asset on our watch list for today is the cable market, the GBPUSD, where we had a phenomenal over 1,300 pips in profit on that single buy position we had at the beginning of the week. Remember, we had about 7 positions on that one. Let me zoom out so we can see how we took advantage of this opportunity following the breakout of the 1.22375 at the beginning of this week. So for those of us who took advantage of that opportunity, well done and kudos to you for being on standby to capitalize on that move. Well, in the last 24 hours, like I said earlier, we're beginning to notice the reemergence of positive traction in favor of the US dollar, which could be as a result of a retracement of the bearish move we saw on Monday and Tuesday. But it's not a cast in stone yet. We don't know if actually it's going to be a retracement, because we noticed that the US Treasury yield has been gaining some momentum also as well. Now, how far will this go is what we don't know yet, but we are going to be taking some technical dissection into the current market structure to see how we are going to be capitalizing on any potential move here. Now, another thing I would like to state here is that the upside move which started on Monday also may be limited due to the consensus or the general belief that the Bank of England may likely going to be starting or initiating interest rate cuts in the nearest future, which is of course supported by the softer UK consumer inflation figures that came in yesterday. So we are going to be looking at the chart today to see how we intend to capitalize on the next move. So let's run through the current market structure from a technical standpoint, and for the sake of those who are not part of the earlier sessions, let's see how we capitalize on that strong bullish momentum at the beginning of the week. So at the beginning of the week, we had this hold on a second, we had this beautiful flat range where price was initially confined between the 1.22375 and the 1.22225 area to emphasize the level of indecision going on in the market at that point in time. And of course, you know how we treat our flat channels. Whenever we identify them, we wait for a signal in the form of a breakout of the resistance line to buy or the breakdown of the support line to sell. However, if you look at what happened, there was no point in time where sellers tried to break through the support line, hereby negating the idea of even considering selling this asset. As you will see, price continued to climb up, break out of the 1.22375. Then we also added more positions at the breakout of the 1.22535. We added more at the 1.22710, and we added one more at the 1.22805. And finally, on Tuesday, we added one more at the breakout of the 1.23, which eventually came in as that massive impulsive move we saw here, riding the momentum all the way to the upside. So we had a minimum of 1,300 pips. Once again, congratulations to everyone on that one. Then during our live session yesterday, we begin to notice the indecision that is gripping the market during the Asian session. And of course, it didn't come to us as a surprise, as we knew that everyone was looking forward to the economic features from both the United States and the United Kingdom for yesterday to give us clues into how to move. However, data from the United Kingdom came in with a mixed figures. We had some positive figures, and as well we had some negative figures. So this resulted in a bearish reaction for participants in this market, as we saw a reversal pattern yesterday, and we said we will be using the 1.248 area as a yardstick to guide any selling opportunities. So we saw this double top structure here, and we marked out the 1.248 as the neckline of that reversal pattern. And one thing we said here yesterday is that a breakdown and retest of this neckline will be giving us an opportunity to sell, which was exactly what happened. And as you will see, we added more positions again at the 1.24560, added one more at the 1.24100 area. And as at this morning, I shared an update here that we do want to be adding one more at the breakdown of the 1.238 if price action does break down that structure, which of course I already have that triggered, but it's currently running in the loss right now. But it's okay. We've been able to scoop in over 120 pips from these multiple sell entries we have been enjoying in the last 24 hours. And once again, congrats to everyone who took advantage of this opportunity. Now, the next thing we are going to be doing right now is to ensure that we protect all the sell positions we have right now. And in that regard, I'm encouraging you to move all stop losses anywhere. I would like it to be above the 1.241 area, which is exactly just right above that trend line, as if price will break out of that trend line, then this might likely negate the bearish momentum we are expecting here. So moving your stop loss around that area, and please, while you are moving your stop loss, ensure that you give enough breathing space for price action to move around, just in case it wants to retrace before the downtrend continuation happens. So with a well secured position at this juncture, what is going to be our next line of action for today? Well, the first thing I would like to say here is that since the beginning of this week, price action has been very, very bullish, and in fact we have a massive impulsive move in that regard. And usually whenever we have such impulsive move, there is this psychological expectations that those who had bought at a very, very cheap price at the beginning of the week and will have amassed a significant amount of profit may want to start closing in some of their positions, taking in some profits off the market, and as a result of this usually reflects on the chart as a retracement move. And if you look at what is going on here, you will see that a price appears to be doing the same as you will see after that impulsive move. We're beginning to notice price drop to the downside. Now, the question going into today's trading session is how far will this retracement phase go before the uptrend move happen? Or is this going to be inciting a massive sell-off to the downside? Well, we have a couple of structures here that we will be using to guide our decisions today. The one of them is the ascending trend line we spotted here during our live session on Tuesday, I think. Yes, on Tuesday. So we saw this ascending trend line marked out here, and in fact it had played a major role in determining the direction of price action since last week Thursday. So if you look at it closely, you see it was more of selling around Thursday stroke Friday's trading session, and during the early hours of this week it was more of selling before price finally broke out of that trend line. And since the breakout of that trend line, price action had continued to stay afloat of the trend line, as you will see right here. Now you know how we treat our ascending trend lines in this community. As long as price remains above the ascending trend line, we want to look out for patterns and structures that support the idea of buying. Now, with the place where price is right now, does price have a chance of dropping back into the trend line, where depending on how price reacts to the trend line will determine what our next line of action will be. So if we see reversal patterns here like double bottom structure, then this might likely be inciting that uptrend move. However, if price drops below the ascending trend line, then this might incite a sell-off maybe into this trend line this week. So we don't know what will happen here, but we have a bus stop that we can use to guide our trading decisions for today. So the first thing I will do here is to extend this trend line so that we can use it to guide our decisions if price action ever comes close to that trend line. Now, the second structure that we have on this chart is this. Now, if you look at since price action tested that high at the 1.25050 level, that was on Tuesday, we saw selling pressure around that area, which of course incited this potential retracement we have here. And in that regard, we have a couple of descending trend line, as you will see, after connecting the series of lower highs. We have this descending trend lines to guide our trading decisions for this week. And if price remains below this descending trend line, then that will validate the retracement move. So we'll continue to stay in a bearish momentum, maybe into the ascending trend line, after which we want to see how price will be reacting to that trend line to decide what our next course of action will be. However, if at any point in time today, these trend lines, this descending trend lines we have here gets broken or breached to the upside, then we want to start considering buying the GBPUSD. Now, to give a visual representation of what I'm talking about, I want to see price break out of the 1.24100 area, and then if possible retest of structure, then we'll want to be joining that uptrend move. Personally, I have a buy stop order above the 1.241, and for those of us who have been part of the profitable journey so far this week, you can afford to place your buy stop order with the hopes that price will reverse from this area. So let's see how price will react. But for those of you who are joining us for the first time, you do not have any leverage to bank on right here. So I will just encourage you that as soon as the breakout happens, exercise patience, wait for retest of structure. It could take about 2 to 3 hours before the retest happens. Then we want to be part of that uptrend move. So most importantly here, the only condition that will make us consider buying the GBPUSD today is for price to take out those descending trend lines. So let's see if we are going to be having the breakout of those descending trend line, and of course if price drops below the 1.238, we look out for selling opportunities here. So it's a simple setup we have on this chart right now. So our center of focus for today is basically between the 1.241 and the 1.23800 area. So you do want to be marking out these levels on your chart, as we will be using it as a guiding light for our independent trading decisions for today. So let's see how this will play out, and trust me, I will be with you in the comment section of both my Trading View and Telegram platforms to give you updates as at when due. So if you have any questions as regards to my explanations, or there are aspects which you need some further clarifications, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions, after which you use that time to mark out these levels on your chart. All right, so I see a couple of comments here. Hadeni Babalola, how are you doing today? Glad to have you around. It's really been a while, really. Trust you are doing very, very well out there. Rita Wakio, I hope it's the Rita I know. How are you doing, Rita? Good morning. Ismet Keskin, good morning to you. Glad to have you around with us this morning. All right, so in the absence of no questions, I'll take this as a positive feedback that we are good to move on to the last and final asset on our watch list for this week. So the final asset on our watch list for this week is my favorite asset, of course, which is the XAUUSD, and popularly known as the gold spot. And for the gold spot this week, we've done very, very well across board. Remember, we have been buying this asset since the beginning of the week, and not until yesterday we had the privilege of joining a bearish momentum, which actually gave us, I think, about 100 pips thereabouts before this bullish momentum began here. Now, at this point in time, all sell positions has been closed. I made mention of this in my commentary this morning, and for those of you who are with me on my Trading View and Telegram platform, you must have seen my update and how we are going to be managing our position on this asset this morning. So I said there that there is the all sell positions have been closed at this point in time, as we notice some deep buying activities happened during the Asian session, especially around the 1,956.50, 1,958 area, giving us some signs that there is going to be a gradual build up in momentum. Moreover, the increasing consensus that the Federal Reserve has completed its interest rate hike may provide further backing for this asset, because you know how this market, how volatile this market is, and we cannot just sit on one particular idea. We want to be as dynamic as possible. However, from a technical standpoint, I still see the potentials that buyers still have a say in this market unless some certain levels are broken. So we are going to be taking some time out to look into the structure from a technical standpoint to see how we are going to be positioning ourselves for today's trading session. However, let me state here that I already have a buy position triggered at this point. I risked some, and I'll be letting you know why I did so. Now, for the sake of those who are not part of our live session, let's quickly run through how the week started and what led to the decisions we made. Now, at the beginning of the week, the first thing we observed here was this trend line. As you will see here, we had a major trend line which was supporting some higher lows since last week Friday, as you will see here. Then in addition to the trend line, we spotted a range where price was initially, I think for the first 12 hours, confined within the $1,941.50 level and the 1,934 area to emphasize the level of indecision at that point in time. And of course, you know how we treat flat channels. Whenever we identify them, we do know that there is some level of uncertainty there. We exercise patience and wait for either the breakout and breakdown of that range to give us an opportunity to trade. Though we had a breakdown of the range, but it didn't fall through with our plans, as we all agreed here that we will need some breakdown retest of structure for us to join a downtrend, because of the fact that price was sitting on a solid demand zone on the higher time frame. For those of you who had not watched my video on the XAUUSD during the weekend, where I did a top-down analysis from the higher time frame, I encourage you to watch that video, as you will see the psychology behind the decisions we are making on the 1 hour time frame. The links are right in the description box of this current video. So that negated the idea, and then we had a buy stop order sitting above the resistance line at the 1,941-ish. Then we joined the bullish momentum from there. And remember that we had multiple entries. Of course, we had our key level at the 1,945. We had a breakout of that structure, welcoming more buy positions. We also had the 1,948, welcoming one more buy position. And of course, we also had the 1,959 area as at Monday to capitalize on more opportunities. So we scooped in over 800 pips in profit on the XAUUSD on that single bullish momentum we saw here. Now, during our live session yesterday, we begin to notice some development in this market, as you will see that we had a high around the 1,975 area. And one thing I said here yesterday is that if at any point in time price breaks down both the 1,970 and the ascending trend line, we want to get ready to sell. And of course, though those of us who are not profitable, who don't have any trade prior to this position, would not have taken this position. But if you had risked it, well, good for you. But for those of us who are profitable, we had a sell stop order below the 1,970. Price rode to the downside. In fact, it moved about, let's see, about 120 pips, 130 pips thereabout. We had multiple entries as well, but we were taken out with about 80, 60 pips thereabout. And for those of you who took advantage and moved your stop losses accordingly, well done to you guys for doing so. Now, for those who still have sell position, I don't know why you still have a sell position at this point in time, but if you do, please close your positions right now, okay? Now, with that being said here, how do we intend to manage these positions as we head into both the London and the New York session? Well, the first thing I would like to say here is how important and crucial the $1,957.50 level is around this area. Now, if we go to as far back as the beginning of this week, let's say Tuesday, I think, we saw the breakout of that $1,957.50 area, and then we saw price come back into the structure yesterday during the New York session. And one thing we noticed is that despite the engulfing bearish candle that gripped the market, we saw how it became difficult for sellers to break through that area, which becomes a red flag that this area could be a strong zone for buyers to hold on to. Then during the Asian session, this further confirmed that buyers are very, very strong around this area, as we saw another rejection of that area, negating all attempt by the sellers to break through that level. Now, as a result of this development, I positioned myself just right above the 1,964 area to capitalize on that move. Now, if you look at the multiple rejection of the 1,957 area, it looks more like a double bottom structure for me, that where the 1,964 area serves as the neckline area to look out for buying opportunities here. Now, there's another thing I would like to share with you here, which further emphasizes the bullish bias at this point in time. Now, if we look at what has been going on since the beginning of the week, you will see that price action appeared to be within an ascending channel, which further buttresses the strength of the buyer. So if we connect a series of higher lows, you see we have an ascending trend line, which I will be calling the support line of that range. Then if you connect the series of higher highs, we have a resistant line of that channel, giving us an idea that we have an ascending trend line, ascending channel to work with for today's trading session. Now, as long as price remains within the ascending channel, I want to still consider buying this asset. Now, for those of us who had missed out on the breakout of the 1,964, well, there's no point to worry, as we could still have a situation where price could come back and retest the structure, or even come back into the ascending trend line. And if that happens, and we begin to see buy pressure, that is, sellers are finding it difficult to break through the support line of that range, then we want to be part of an uptrend move. And in fact, we have multiple entries here that we will be using to maximize the potential of this bullish move. So we have the 1,970. We also have the 1,975. If they get broken to the upside, we do want to be adding more buy positions to our existing trade. So that is how we are going to be holding on to a bullish bias here. Price still remains within the ascending channel. Price sits above the ascending trend line, of course, and of course above the 1,964. So everything around this area is continuing to scream bullish for us. And in fact, we also have this $1,957.50 area where we saw our sellers have found it difficult to break through in the last 48 hours. Now, with that being said, now with the idea of thinking of buying the XAUUSD today, remember how we do it in this community. We also want to keep tabs with the potentials the sellers also have. So in this case scenario, what is it that we will see on this chart that will make us change our bias from bullish to bearish? Now, if you look at the structure, the only thing I want to see here is for price breaking down the support line of that ascending channel, which is this one right here. So if price action does break down that structure to the downside, then I want to start considering selling. But I will only feel very, very comfortable if price breaks down the $1,957.50 area. Of course, you saw how this level had played a major role in negating all attempt by the sellers to break through, giving me signs that this area is a very, very strong demand area. So personally, from a long-term perspective, a breakdown of this level should make us feel comfortable joining a bearish move. However, we can still take advantage of a selling opportunity even before this breakdown happen, only if the market will give us convincing setups that may manifest on that chart. So if price breaks down the ascending trend line or the support line of that ascending channel, how we begin to see that buyers are finding it difficult to climb back above, and we begin to see some series of lower highs and lower lows on, let's say, the 15 or 10 minutes time frame, then we could actually sell even before the breakdown of this structure happened. Now, there is a caveat to this bearish momentum here. If it ever happens that price breaks down to 1,957.50, is that we have an ascending trend line right here, which is situated somewhere around the 1,950 area, where we want to ensure that if price comes into the structure, we secure all the sell positions and wait to see how the market will react to that trend line. Now, depending on how price reacts to that trend line will now determine if we are going to be adding more sell position or getting ready for an uptrend move. But trust me, I will be with you in the comment section of both my trading view and Telegram platforms to give you updates on how we are going to be managing the trade if price action gets to that area. But at this point in time, I'm not leaning towards a bearish momentum right now. I'm still holding on to bullish momentum, considering the fundamental factors I mentioned earlier. But if it so happens that as the support line of the ascending channel got broken to the downside, then we have no other choice than to start considering selling the XAUUSD. So these are my views on the XAUUSD for today. I do hope I made myself very, very clear. And if you have any questions, feel free to let me know in the comment section. And before I take some time off, I want to say here that if you have found this content in any way helpful and useful in making your own independent trading decisions for today, kindly support this project by given the video a thumbs up. Your likes are very valuable to me, and in fact it also helps the algorithm promote the video to a wider audience of traders who may find this content beneficial to them too. And thank you in advance for doing so. For those of you who had liked already, thank you very much for your support. I really do appreciate that. And for those of you who are yet to like, please do kindly support this project, and thank you very much as you do so. So with that being said, here I will be taking some time off to wait and see if there are any questions whatsoever before we round off for today's trading session. All right. Okay, I just dropped a link to in the comment box. I pinned it at the top of the chat. That is the link to the XAUUSD live window, and it kickstarts 5 to 10 minutes into the New York session. You want to click on that button, click on the notify me button, of course, and you will get notified as soon as we come online. And for those of you who don't know, the XAUUSD live window is a platform born out of popular demand from this community, where we all gather to follow the XAUUSD real-time price action during the New York session. It usually lasts, I think, the first 6 to 7 hours of the New York session. So you do want to be part of that session, and let's see together how we are going to be managing our trades for today's trading session. And I see a comment here from Kelechi. Kelechi is asking, do I have a mentorship platform? Yes, I do. I do have a mentorship program. It's a one-to-one mentorship program, which is basically designed for those who are already well knowledgeable in the financial market. You understand the basics in the financial market, but you're struggling to maintain consistency on your account. So then if you are that, if it resonates with you, then you can contact me. I have my email right in the description box of this current video you're watching. Send me a mail, and then I will respond to you and let's see if we can work together. Okay. All right. So in the absence of no questions, I want to assume that we are all on the same page, and in fact it has been a wonderful moment with you guys this morning, and this week so far has been a very tremendous week, as we were able to maximize some significant positions through the course of the week, and well done to everyone who was on standby to capitalize on this move. And for this week, we've been monitoring 3 major assets, the USOILSPOT, the XAUUSD, and of course the GBPUSD, all of which we were able to identify simple setups using fundamental tools such as trend lines, key levels, and chart patterns, only to gain valuable insight and of course unravel the potential trajectory of price action for both the London and the New York session today. So I do hope you marked out those levels on your chart, because you will be needing them as a reference point to guide your trading decision. And I also encourage us that we don't want to make impulsive decisions. This is why we already have a plan. Let's ensure we stick to it, remain patient, and allow structures to mature before jumping into any positions. And for those of you who joined us for the first time today, I do hope you are able to gain 1 or 2 things from what we discussed here today. If you did, I look forward to seeing more of you tomorrow. And in fact, I also encourage you to be part of the subsequent editions, as the more time you spend with us, the better you'll become in understanding our analytical approach, and eventually be able to make your own independent trading decision based on the knowledge you gather here. So I see your comments here. Kriba, how are you doing? And good morning to you. Asking for the Telegram channel. It's scrolling at the bottom of your screen. If you look at the pink option on the bottom of your screen, you will see my Telegram channel there, and of course my TradingView channel there too as well. And of course in the description box below, you will see everything there too as well. So with that being said here, it has been a pleasure with you guys, and in fact I wish you the best of luck today, and of course I look forward to seeing you all in the comment section of both my TradingView Telegram platform and of course during the XAUUSD live window as we continue to monitor price action. Do have a wonderful day, everyone. Bye bye.